Good afternoon, ladies and gentlemen. It's close to 1 o'clock. It's 12:48 p.m. Eastern Standard Time. So I'm doing this real-time video cast for the benefit of educating and teaching and hopefully helping a lot of retail traders who just seem to be truly clueless, not clueless eight, but truly clueless and ignorant as to why markets do what they do, despite the fact that I have put multiple charts with arrows, with levels posted for them to monitor on their own screens and make money. That's just the way it is. So here is a real-time thing here, and it really can't get any more simpler. We have a big uptrend line that I've been showing for a while. We break that, we're going to fall very fast. This is a consolidating triangle. Okay, consolidation triangle, if you want to put it this way. That's getting narrower and narrower. It's getting rebuffed with the 34 and the 50-day SMA, which in itself is not a very positive. It's somewhat negative because we can't seem to get over the 34 and the 50. Once we get over the 34 and the 50, then we can talk about getting to the upper Darvas and things like that. But in the meantime, the market is going to hold, is trying to hold this consolidation triangle levels that are being propagated by many different things that's happening out there. You got gold crashing. There are currencies like the UK pound, the second most important currency in the world, crashing. You got the dollar rising sharply, and also, most importantly, you got gold and gold miners falling apart today. So the bottom line is that when you have all those things happening, there is going to be pressure in the market. Techs are doing fine. Biotechs are doing flat. So there's not like a full scale rout, but it's primarily held in the 6 or 7% of the S&P commodity market where you're seeing a lot of pressure. Probably 4% of the S&P is in gold and commodity related stuff. So this is going to keep on doing that. It's going to keep on making a lot of ignorant traders who are not focused and disciplined. And I'm straightforward about it. This is unscripted stuff. I'm not reading off a teleprompter. I try my hardest. You guys should do too. And then you can do those tactical trades on the S&P and the RUTs and make some serious money and just sit back. The reality is you have to learn. Sign up for the advanced coaching sessions. I spend hours and hours explaining all this stuff and teaching, and then put them to work, and you see the magic. This is structured volatility. These two candles here over the past 2 days has not engulfed this large bullish engulfing candle. If it creates a bearish engulfing below 2135, and remember, we're talking about the E-minis here. We're talking about the futures. That's what the pros look at. Okay, they're not just looking at the SPX and stuff. Of course, you translate that into SPX. So bottom line is, if it breaks below this green candle, then you have a bearish engulfing. A bearish engulfing below that means that the red candle is going to expand below this, and then we're going to fall quickly here. Going to go short again. Those puts that were bought, and I already traded them out twice, at around 7, slightly lower, are at $13 right now. I'm out of them mostly between 11 and 12, more than an hour ago, because I want to sit and see what's going on. Because there could be a sharp move up of this megaphone, of this uptrend line, which could turn things up real fast, and then you're caught. In the meantime, this is a daily chart. Internals are sloping down, so that's a negative. And then if you look at the same thing on the 1 hour, you're going to see that the 1 hour is getting quite overbought. We have capitulation volumes here. You can see that. That's where the drop happened. That's where you make that 70% in 5 minutes. And then you're seeing that down here. So once it gets down here, it might just, do another reversal. That's what it's been doing for the last couple of days. Is there anything new there? I did mention more than a week ago that we're probably going to move sideways in a very tight range, except this tight range is resolving itself into a very tight consolidation triangle, which, for all I know, could break below this, depends, or break out. Given the seasonality of what's going on, both outcomes are possible. So you got to watch all these on your screen too. Set up your charts. It's not, otherwise, don't sit there And again, in crazy, in not crazy, in this structured volatility, it's not like you have to push a trade all the time. There's certain trades that are doing very well. So now the selling's coming in. You can see that if you want to put a 5-minute on, what I do is I just expand the 1 hour right there. Look at that. You got 3 candles here. Does this mean we're just going to crash and burn? Not really. It simply means we're probably going to test here the 2137 level, which is good for 9 points on the downside. Those puts, the 2165s from 7, are right now at 13.5. Again, we'll see. But this is negative. Go back to the daily. Let's see how this is looking. Again, we are still within the triangle. So you make a big bet, and it's not a bearish engulfing yet. You know what they're going to do? They are going to decimate you if you're heavily, heavily short. So that's the way we go from now. I'm putting this up for everyone to see, and please work smarter. Your brain is your ATM machine. This is not kid stuff, okay? But kids could probably understand it better. Sign up for the advanced coaching sessions that I do for hours and hours, and you learn all this, and you can manage your trades better and not sit there and scream and shout and pray all the time that, oh, I hope the market bounces. That's like the worst line ever in the trading business. And I stopped saying that to myself years ago. Thank you for listening. This is Clueless Day Trading Frank.